Good morning, good evening, everyone. Thank you for joining our latest webinar. Today, I'm very happy to have my good friend Tom Joyce joining us from New York. Thank you, Tom, for joining late in the evening there in New York. So Tom is going to be speaking today about the AI boom and what we're seeing and how that's all playing out. You can see the title of the webinar there, Bottlenecks to Scaling AI Computational Power. So we've got some really interesting slides to go through with Tom. He's going to speak for about 30 to 40 minutes, and then we'll have time for Q&A at the end. So please enter your questions in the Q&A function or in the chat here in Teams, and we'll cover that off at the end. But for now, I will pass to Tom to give us his presentation. Thanks a lot, Tom.
Okay, thank you, Matt, and good morning to everyone in Asia. I was just in Asia last week, traveling through China and South Korea, now back in my home in Connecticut, just outside New York. I'm going to take you through today an abbreviated version of a publication we released a couple of weeks ago about AI's explosive growth and really exploring the bottlenecks to that growth expanding. The growth is explosive in any scenario, but the speed of growth is certainly runs through some bottlenecks. And what you'll see as we go through this publication, where the bottleneck is most acute, you will see the market repricing accordingly in that part of the supply chain, both in the stock market and the value of goods themselves. I'll start with this quote by the former CEO of Intel, certainly something that we subscribe to, this idea that microchip supply chains will shape geopolitics more than oil over the next 50 years. Of course, today with the Strait of Hormuz in the Middle East and the semiconductor supply chain, which is spread largely, not entirely, across Asia, these are two of the most important supply chains for the global economy. When we think about AI's expansion, I would say a couple of years ago, after the release of ChatGPT, that historic date, November 30th, 2022, the first few years, the predominance of the bottleneck in AI's expansion was access to microchips, specifically NVIDIA's most advanced GPUs. For the last sort of year or so, 2025 into 2026, the most acute bottleneck today is in memory chips, DRAM and NAND, the chips coming out of South Korea and the United States. And you will see a repricing of those markets in the data that I will show you. As we move forward to 2027 and 28, increasingly, we anticipate more of the bottleneck to growth occurring around energy. There's plenty of energy at a macro level to support AI's expansion, but at a micro level for a specific data center project, the bottlenecks are already emerging. Before we even get into the bottlenecks, let me just sort of substantiate some data around the degree to which AI has become a megatrend. It is driving our stock market, it is driving our economy, it is driving CapEx, it is driving geopolitics. If you look at Q1 earnings for the S&P 500, which were an extraordinary 28%, let me say a couple of things. Number one, that number was expected to be 13% just 2 months ago. So we continue to exceed expectations, and the Mag 7 big tech companies who are driving AI are the ones enjoying the most growth in earnings, 63%. But even the other 493 S&P 500 companies, this is extraordinary earnings growth. And one of the things that I often say to clients, we've got these competing forces, Middle East conflict and AI's expansion. And at least today, when oil prices are below, we would say about $120 a barrel. Today, we're well under that. But anything under about 120 a barrel, we would say AI is the greater force than Iran and war and trade war combined for the global economy and global markets. We believe that to be the case today. If I just showed you the U.S. economy, you could see here that AI and tech-related sectors are growing at over a 30% rate, and the rest of the economy is relatively flat. You can see here the share of total CapEx across a range of European and Asian economies vis-a-vis the United States. U.S. CapEx is very heavily weighted toward AI and technology expansion. 50% of the stock market today is in tech-related sectors. Nearly 20% of the US dollar bond markets, which are accessed by companies all over the world today, are in AI-related sectors. So AI is a mega force in both our equity and bond markets. We are in the midst of the largest M&A year in history. We are 30% above last year's levels year to date, and last year was the second largest year in history. We are almost certainly at this pace going to be the largest M&A year globally in history, and technology has an outsized share of that growth. Historically, technology accounted for about 10% of M&A. With the explosive expansion of AI, that has risen to about 27%. And of course, globally, AI now accounts for more than 80% of venture capital activity. So AI is a pervasive megatrend in and of itself across the economy and markets. Capital markets have been extraordinarily receptive to the large financings taking place in AI's expansion, especially here in the United States. So at least thus far, capital markets have not been the bottleneck to growth. The U.S. spending is extraordinary. $2 trillion expected this year. That's 6 times larger than China, 10 times larger than Europe, 20 times larger than India. These are absolutely massive numbers that are driving U.S. growth across the economy, across corporate earnings, and in our markets. About half of that spending is coming from the big 5 hyperscalers. And by the way, about a third of this spending is going toward the number one bottleneck in AI's expansion today. That is the memory chip companies. Access to memory chips is the most acute bottleneck today. But the capital markets have been very receptive. You can see here a snapshot of the largest US dollar issuances since January of last year, over the last 18 months. Technology now accounts for 8 of the 10 largest deals in history. In the last 18 months. Many of these are the largest in history. These are just extraordinary numbers, and you would never have had a page like this just several years ago. And the growth is so massive that these hyperscalers are now issuing almost like a sovereign in multiple currencies. Look at Alphabet at the bottom. 2 weeks ago, they did a yen deal. That is the 6th currency that Alphabet has tapped into in the last couple of months. They've done dollars, euro, sterling, Swiss franc, Canadian dollar, and now yen. You can see Amazon, 10 days after the Middle East war began, Amazon prints the largest bond financing in history, $54 billion, which of course also had the largest order book in history. So the investor appetite for this paper is incredibly strong, given the strong balance sheets of these companies, given the earnings growth of these companies, and given the market's perception of the total addressable market that they have been early movers to capture. And you can see here the receptivity to these deals. Yes, spreads are a little bit wider since the Middle East war began, but still pretty close to the multi-decade tights. And despite the volumes, tech trading just on top of the IG index. The sheer physical footprint of these data centers globally has been a bit of a challenge for AI's expansion. It's part of why a lot of these data centers are moving south in the United States, and in Asia and in Europe. The challenge of building data centers in very densely populated urban environments is extremely challenging, especially because of not only the physical space, but then the knock-on effect to electricity prices. You can see here that the United States has 45% market share on global data centers. We're 75% market share by computational power. It's kind of what prompted me to use this famous quote from Mark Twain from 1897. The rumors of my death have been greatly exaggerated. I think many of us, myself included, frequently subscribe to this thesis over the last 20 years or so, that China is a country on the rise, that the United States is a nation in decline. And in many arenas, there is some truth to that relative comment. But AI is not one of them. AI is an area where the United States enjoys extraordinary competitive and strategic advantage. It is entirely coming out of the private sector. And I would argue that the United States and China jointly are the two largest AI and technology powers in the world. And that gap to the rest of the world is actually, in our view, expanding from here. And there's no other area more than in sheer computational power where the United States enjoys so much strategic advantage. These are the largest sort of compute capacity companies in the world. And you can see NVIDIA, Google, Amazon, and AMD. Huawei, much smaller in terms of its annual chip production by comparison. This map here gives you a sense of the sheer magnitude of the data centers built across the United States. We now have 8,000 of them. There's 5,000 existing, 3,000 being built. The green dots are the existing data centers across the country. Notice that they are smaller. Notice that many of them are concentrated heavily in the Northeast. And the ones being built, the yellow dots, number one, are much larger. And number two, they are moving south. Why? Because of the bottleneck to physical space. And number two, the bottleneck in terms of access to energy. And consider this a bit of a blueprint for a similar dynamic that is taking place globally. Access to energy and physical space are critically important variables to data center growth. Now, if I were to just expand on this thesis, just to really zone in on the sheer computational power, and I've shown this slide to numerous folks across Asia in the last couple of months. If you look at that one data center in Louisiana there in the bottom center of your slide screen there, you can see Louisiana in the blue outline next to Texas. There's a large yellow circle. That is Meta's Hyperion data center in Louisiana. Now, if I were to just focus on that one data center of the 8,000, just one, okay, and this is from Meta's website, it's not my photograph. If you were to superimpose that data center for scale over New York City, this gives you a sense for how large that one data center is. And we're actually building data centers larger than this in Texas. These new data centers being built across Asia, in the United States, and at a slower rate in Europe and other parts of the world are absolutely massive. This one is 3 times the size of Central Park. When it is fully up and running, it will have 3 million NVIDIA GPUs and about 150 million memory chips being supplied almost entirely by 3 companies, SK Hynix in South Korea, Samsung Electronics in South Korea, and Micron in the United States. Those 3 companies have about a 95% market share on memory chips. And the computational power of this one data center, just this one data center out of 8,000, when it is complete, the computational power of this data center will be larger than the aggregate computational power we had on all of planet Earth just 5 years ago. So this gives you a sense for this magnitude of the growth and the sophistication of the technology, and it is precisely why Elon Musk and his company SpaceX have pivoted toward a strategy of moving these data centers to space because of the bottleneck around physical footprint, because of the bottleneck around access to energy. Space, of course, provides 24-hour solar. It provides cooling by virtue of the temperatures there. There are certainly many challenges to him growing this company, right? He's launched about 11,000 satellites to date. He's filed a permit with the U.S. government to launch another 1 million satellites. It is very difficult from a cost perspective to launch this heavy equipment into space. It's very difficult to maintain semiconductors in an unstable orbital environment. The challenges are enormous, but on the back of this strategy and his prior successes with other companies, this is likely to be the largest IPO in history, already filed and likely priced before the summer. And so the whole entire strategy of this company has been built around the bottlenecks of physical space, limitations on Earth, and access to energy. Taiwan, of course, is a major bottleneck to scaling growth should there be a geopolitical event, given the enormous concentration of manufacturing, right? We've got all of these different geostrategic bottlenecks globally. From a trade perspective, arguably the Strait of Malacca is the most important trade geostrategic choke point in the world. Of course, the Strait of Hormuz is the world's most important oil and gas choke point, and Taiwan is the world's most important choke point in the manufacturing of semiconductors. The entire rest of the supply chain exists in other parts of the world, but the manufacturing, the foundries, a business model established by Morris Chang at TSMC. He spent 25 years at Texas Instruments, and then moved back to Taiwan with heavy government incentives in 1987, and began the foundry model, and he did a remarkable job. Now, that is only one piece of the supply chain. In the upper left, you've got the software tools. In the upper middle, you've got the design companies like NVIDIA, arguably an equally important part of the supply chain. You've got the memory chip companies in the upper right. They are IDMs. They're basically vertically integrated. They do the design and the manufacturing. You've got the capital equipment for the fabs, the most sophisticated equipment coming out of the Netherlands. You've got the foundries, which TSMC in Taiwan dominates, and then assembly, packaging, and test. And so there are bottlenecks to AI's expansion at every part of this supply chain, number one. And number two, each part of this supply chain has been repricing accordingly in accordance with how acute the bottleneck itself is. Look at TSMC's stock price, for example, since ChatGPT was released 3.5 years ago. TSMC probably has about a 60 to 70% market share on the manufacturing of microchips, but when it comes to the most advanced AI chips, their market share is closer to 90%. NVIDIA outsources their NVIDIA is a fabless company, as you know. They are the world's leading design company and arguably software company as it relates to microchips. But about 85 to 90% of their chips are manufactured in Taiwan. The other 15% are manufactured in Arizona at a TSMC facility. You can see 75% of TSMC's revenues, despite their Taiwan location, are actually in North America. And this is a photograph of the fab they have built in Arizona. It is already up and running. As I've already said, about 15% of NVIDIA's chips are manufactured here. This is the single largest foreign direct investment project in the history of the United States. Already $165 billion, heading toward $500 billion before it is complete. So the United States is moving rapidly to reduce its exposure to this bottleneck. We've built more than 80 fabs across the country since 2022. This is largely private sector driven with government tax cuts. But the sort of diversification and the de-Taiwanization of the U.S. reliance on manufacturing is potentially moving slower than what some to perceive to be the risk clock around a potential geopolitical event in Taiwan. The silicon squeeze remains a very, very acute bottleneck. It was worse in 2023 and 2024, but access to microchips is a key bottleneck for the explosive growth of many of these AI companies. You can see here in part why the semiconductor index itself has also exploded from a valuation perspective since the ChatGPT release 3 years ago. And when you think about these fabless design companies who are designing the most sophisticated chips in the world, of course, it is not surprising that NVIDIA is at the epicenter of many of these cross holdings and these deals that are taking place and being announced in the papers on a weekly basis. Many describe these deals as a house of cards or a set of dominoes waiting to fall, but I would suggest to you that many of these deals are really a function of securing access to microchips, long-term investment agreements, capital investments in exchange for access to microchips. This is the world's most sophisticated piece of hardware. NVIDIA's latest microchip that is coming out in July, their Vera Rubin chip. That one chip is about the size of a credit card. It's got 336 billion microscopic transistors on this one chip. And NVIDIA sells about 7 million chips per year. And this chip, the world's most powerful and complex piece of hardware, is strictly prohibited for sale into China. And so access to this technology is a bottleneck for China's rapid expansion around AI. And you can see here that Huawei's Ascend chip in the lower left, a very powerful chip, not nearly as powerful as the latest iteration that currently exists, NVIDIA's Blackwell B300 chip. And then as soon as this July, in 2 months, look at the performance difference of the Vera Rubin. And this doesn't even factor in the extraordinary clustering, because the NVIDIA software layer over this microchip is so sophisticated. NVIDIA can cluster about 500 million of these chips together in an ecosystem around a data center and get extraordinary performance. And so access to this computational power, this type of performance as a result of export controls to China, is a bottleneck for China's expansion. China can kind of try to replicate that by just having more of the lower performance Ascend chips in a given data center, but the performance differentials are pretty significant. And you can see here that is part of why NVIDIA's stock price has exploded, left side of the page, since the ChatGPT inflection point 3.5 years ago. Broadcom and AMD are also leading fabless design companies in the United States, but none as powerful as NVIDIA. As I mentioned earlier, and I'll say it again, memory chips today are the most acute bottleneck in the supply chain. These are vertically integrated companies. You can see that pricing of DRAM and NAND chips have exploded over the last 8 months alone. And that is because of this sort of massive confluence of forces that have sort of created a crunch in access to memory chips, right? Some of it's coming from the demand side, right? The data center demands for memory chips. I mentioned that one Hyperion Meta data center in Louisiana will need about 150 million memory chips. It's also because we have an oligopoly between 3 large and very disciplined players with a long history, the 2 in South Korea, the 1 in the United States. The lead times for new fab construction today are more like 3 to 5 years. We're just coming off a multi-year down cycle in semis in 2022 and 2023. So there are a lot of reasons that this memory crunch is taking place on both the demand and the supply side, and that in turn has fed very acute price appreciation in these sort of big 3 memory chip players. And SK Hynix and Micron have now joined the short list as of the last 24 hours of trillion-dollar companies from a market cap perspective. So as I mentioned earlier, as the bottleneck to AI's expansion evolves, so too does the market reprice to capture the magnitude of the bottleneck and the growth coming out of these companies. If you shift to another part of the supply chain, the EDA design tools, it's dominated by these 3 companies in particular, especially the 2 US companies that really dominate the high end. And there are restrictions and monitoring and licensing agreements that are very closely monitored on the sharing of this software technology to design chips into China. And then, of course, there's the capital equipment, which goes into the foundries at TSMC and other manufacturing centers globally. There are 3 countries, the United States, Japan, and the Netherlands, that dominate this part of the supply chain, and none more so than the Dutch company called ASML. ASML manufactures the world's most complex and most expensive piece of equipment. This is the piece of equipment that has the EUV lithography that can etch 336 billion microscopic-sized transistors onto an NVIDIA microchip. It's got about 700,000 parts. It requires 1,000 engineers to put it together. They only produce We believe about 80 to 100 of these machines a year, and each machine costs more than $400 million. The world's most expensive and complicated piece of manufacturing equipment. And let me say one more time, this piece of equipment, like the NVIDIA most advanced chip and other parts of the supply chain, are strictly prohibited for sale into China, thereby creating probably the most formidable bottleneck to China's advancement in computational growth. And you can see the stock prices of these companies up significantly since the ChatGPT inflection point 3 years ago. Back in 2022, it was actually under President Biden, the United States with its companies, Applied Materials, Lam Research, KLA, Tencor, and then the Japanese company, Tokyo Electron, and then the Dutch company, which is the most important, ASML. In this part of the supply chain, they signed a trilateral agreement back in October of 2022, restricting the access to this equipment, in part due to the long history believed by Washington and others about the challenges of, obviously much of this is sort of cutthroat competition, but it's also the challenges of protecting IP and technology and forced technology transfer over time historically in China. Just a lot of different opinions about that, but certainly this is an area of significant competitive advantage that Washington and its allies are reticent to share at the moment. China has enormous strategic advantages in other parts of the supply chain, certainly strategic minerals as well as energy. We are in a new era of resource nationalism where these rare earths, which are all around the world, countries adopting their own policies, wisely so, to protect these rare earths, engaging in strategic alliances and state subsidies, export controls, licensing agreement requirements, an extraordinary new period of controls and creating bottlenecks from a different variety. Nobody does a better job on strategic rare earths than China. China dominates the production of them with 70% market share, but it is the refining of the heavy rare earths, those with the most thermal stability for really high-end compute, where China's dominance is about a 99% market share, and that is a market share that we believe the West will need at least 5 to 10 years to catch up. If you think specifically about AI, the most important critical minerals for AI's expansion, and you can see here the United States relies heavily on China for the importing of many of these most important strategic minerals. I actually overlapped with President Trump on my visit to China a week ago, and of course, part of that state visit between President Trump and Xi was less about maybe the details. I wouldn't say there was extraordinary progress on the details around trade and other issues, but in an agreement to sort of stabilize the relationship. And part of stabilizing that relationship, beyond committing to not doing additional tariff escalation, was extending the rare earths agreement to the end of 2026. And of course, President Xi will be coming to Washington as expected in September, and you may see this rare earths agreement extended even further still in exchange from concessions on the U.S. side. Energy has, of course, become a massive bottleneck. This graph doesn't really do justice to what I'm trying to highlight, but each new generation of microchip requires so much more power that it's actually forcing a redesign of data centers themselves, a complete rethinking of how we deliver power into data centers, the cooling systems, and the physical infrastructure themselves. And this now requires a 24-month construction lead time. So actually, the extraordinary pace of NVIDIA and other companies, but especially NVIDIA, the extraordinary pace of their progress is actually creating new bottlenecks around energy and data center build out. And you can't emphasize the challenge here enough. Today, if you were to break down the users of energy in a data center, right? It is the servers and the compute that are using about 60% of the energy, cooling about 30 to 35%, and other areas. But tomorrow's data centers, like meaning starting now, we expect about 90% of the energy to go toward compute, especially since the most advanced NVIDIA microchips are no longer using air cooling. They're using direct to chip liquid cooling. So the new ratio starting now is more like a 90 to 10, energy going straight to the computational needs of the microchips themselves. And you can see here that the different regions of the world, globally, China, US, EU, all derive different sources to drive their sort of data center power supply mix, but nobody does this better than China. China's got the most complex and rapidly evolving energy system in the world for driving data centers, and we expect that to continue to evolve. China has added more to its electricity grid since 2010, more capacity to its electricity grid over the last 15 years than the rest of the world combined. The United States has less capacity in its electricity grid, but we have at a macro level enough electricity. Data centers are consuming about 5% of US electricity in aggregate, but at a micro level, it's a huge problem. For example, in the state of Virginia, which is currently the world's largest data center market, data centers are consuming about 40% of the electricity in the grid. So that is an enormous bottleneck to the expansion and the growth of data centers in the United States. And many data centers are increasingly dealing with this problem by so-called going behind the meter, not relying on the grid and trying to vertically integrate power through fuel cells and electricity and other technologies. Elon Musk did this famously in his Colossus facility in Tennessee. He managed to separate from the grid the Tennessee Valley Authority. He did it in just 122 days. He brought in turbines, 35 turbines, and completely vertically integrated off the grid his Colossus mega facility, which was an extraordinary achievement. And that being a model that others may try to follow to varying degrees. But even in vertically integrating, we all know we have shortages of turbines and so forth. But we expect tomorrow, meaning 2027 and 28, access to power at a micro level to become a greater bottleneck in AI's expansion. And then the other bottleneck on AI's expansion is, of course, politics, internationally and domestically. When we think about internationally, it's many of the export controls that China has on the United States around its most advanced technologies, and the export controls that the United States and several allies have toward China on really advanced technology. The Washington does this in different ways. There are export restrictions around technologies. There's restrictions on inbound and outbound investment, use of sanctions, putting companies on the watch list, the entity list. But certainly one of the most powerful and pervasive rules is the Foreign Direct Product Rule, the FDPR. And the United States began applying this to semiconductors in particular in the year 2020. And that was the pivotal moment when Washington basically said, we are basically bringing extraterritoriality to our export controls. And the way that Washington does that, they're basically saying, for these selected technologies, if a foreign country such as Taiwan or a foreign company such as TSMC is using US technology in their most sensitive products, the restrictions therefore applies to them. And that was the moment in time where Huawei really had to radically shift its supply chain away from TSMC toward its domestic manufacturing plant, SMIC. TSMC still does some manufacturing for China, but this foreign direct product rule has become a bottleneck for the ability of other countries to do business with China on the most sensitive and advanced technology. And then domestically, the politics around AI and data centers are getting more challenging. If I were to oversimplify, and let me speak to the United States, but versions of this problem are evolving all around the world, especially in Europe, but in many jurisdictions globally, including in Asia. People don't love having these big data centers in their backyard, consuming massive amounts of electricity. This is some data showing that, the cost of your electricity, this was an analysis done, in North America, that the percentage increase in electricity is directly correlated with how close you live to a data center. And this is becoming a big political issue in the United States, and in many parts of the world, right? And so technology companies increasingly sort of restructuring the model so that they absorb some of these costs. From a polling perspective, people are uncomfortable with AI in many parts of the world. That is less the case in Asia. It is much more the case if you look at polling in the US and Europe, right? People are uncomfortable about the way AI is expected to impact their lives, their jobs, their career paths, their sense of security. And this is just one poll, right? I mean, we could look at many different ones, but I'm just trying to illustrate some of the domestic pushback that has begun. People are very excited about AI, but they're also very concerned about its sort of unbridled growth. And we have midterm elections in November, and this has become a front and center issue. President Trump here in the United States is sort of riding the fence. On the one side, he's very much promoting AI. On the other side, he's sort of separating himself from the impact it's having on people's electricity prices. This is another survey, and again, I could show lots of surveys, but it gives you a sense for how people feel about the impact of data centers on the environment, on home energy costs, on quality of life, on jobs. And you can see here, interestingly, and actually, it's not entirely surprising, even though it doesn't make sense, but it may not make sense at the surface, but technology itself as a concept pulls really, really well. And these big tech champions in the United States have been extraordinarily popular and appealing companies from an investment perspective, from a national champion perspective. And yet at the same time that technology as a concept pulls so favorably, AI and data centers pull very, very weakly. And that is part of why we're beginning to see the early stages of government intervention at a local level, where there's now 20 states across the United States with major legislation trying to ban data centers. None of this has been successful so far at a state level. It has been successful at a more micro level. I'm using the United States as an illustrative example of a broader dynamic that is taking place in varying degrees globally. I don't want to overstate the domestic pushback on data centers, but politics, both internationally and domestically, have become a bottleneck to growth in and of itself. The growth is still explosive, despite the memory chip shortages, despite the energy challenges, despite the politics. The growth is still explosive. But one of the things I wanted to show you this evening, my time, this morning, your time, is some of the data around some of the key issues that are constraining growth, that are driving growth, and the repricing of markets that is evolving accordingly. So I will stop there, and I'm going to stop sharing the deck and take it to Q&A. I hope that was helpful. Thank you very much.
My gosh, Tom, you've covered so much there. That's amazing. As always, those presentations really draw you in. And I know we've had a lot of positive feedback about that deck in particular, hence the reason why we put this webinar together. So if I can remind everyone, if you've got any Q&A for Tom, please just put it in the chat, and we will ask the questions. But I've got a couple of questions, myself. I guess the memory chip side of things. I haven't appreciated how how much Korea dominates that space. You mentioned SK Hynix, Samsung, but then there's also Micron, the US company. I know you were just in Korea last week after your China visit. How do you feel that side of things, the Korea aspect, is playing out? And do you think that bottleneck can be challenged by any up and coming US or other companies?
Well, there's a couple of large private companies in China that are massive manufacturers of memory chips. There's some smaller fabless names in the United States like SanDisk and others. But the big three, the two in South Korea, the one in the United States, Micron, today have really an oligopoly, close to 95% market share on the memory chips that matter most, which is DRAM. And given the lead time to fab construction and so forth, they will enjoy that type of market share for some time to come. South Korea is a really interesting country because in my mind, as I thought it through, and listen, I haven't done the analysis. It was just something I was thinking of when I was there. It's hard to think of one country right now in the entire world that is more acutely exposed, negatively and positively, to the two largest macro forces in global markets. That is the Middle East and AI. South Korea is very uniquely exposed to the energy shortages and the physical scarcity of energy. There are other Asian economies as well that are also feeling that. But what's unique about South Korea is the degree to which they're feeling it on the Middle East side, but then the positive force that they're experiencing around AI. South Korea's stock market last year, one of the highest performing in the world. South Korea's growth rate this year is GDP growth is going to be about 2.7%. And the vast majority of that stock price appreciation, the vast majority of that really strong growth is coming around South Korea's dominance as a major tech player, especially around this most acute part of the bottleneck right now, and we expect this to last another year or two. So just because you move toward other bottlenecks like energy, right, doesn't mean that the old bottlenecks completely go away. So I think South Korea is fairly unique in the degree to which they are both adversely impacted by the Middle East and positively impacted by AI's expansion, both at the same time.
Yeah. Okay, let's switch geographies and talk about ASML. I think the case that you provided there about this one company making 80 to 100 machines per year, each machine costing $400 million, amazing. But yet, and I loved all those charts where you had that inflection point of when ChatGPT came around and what the share price can do. But I was surprised, or has done, I was surprised that ASML is only up 177% compared to the 1,000 percentages for these others. What's the deal there?
I'm going to be a little bit cautious about commenting on the stock prices in detail of individual companies for a whole bunch of reasons. But part of it is that, the pricing power that companies have, number one, and number two, their willingness to use it. Some would suggest that companies in the supply chain could be more, I'm not talking about ASML, let me say this theoretically. Some would suggest that they could use their pricing power even more aggressively than they are choosing to. That maybe there are other reasons, right, that they're choosing not to be as aggressive on sort of pricing power. So I've listened to some really top people on this topic, and your question's actually pretty spot on. There's a lot of curiosity about why some companies in that part of the supply chain have not been more aggressive about. But I'm sure they know exactly what they're doing in terms of the medium to long-term growth of their businesses, and maybe some of this is a function of the limited number of machines that you can actually produce per year, right? NVIDIA can produce 7 million chips per year versus 80 to 100 of these massive machines. And ASML has other products and machines as well, and there are other companies in that supply chain, playing important roles as well.
All right, I've got a couple of questions from the audience. First up, Could delays in data center construction and GPU supply chain issues realistically lead to restricted AI access or higher API token prices? And if so, would that pause AI's expansion or just reshape it?
I think just reshape it. I don't know a lot about API tokens, but I would say this. The system right now is growing at an extraordinary pace to meet demand. But the growth is really impressive. I don't think that, access to AI. I think AI's constraints are probably more on the adoption side over the next couple of years than it is on the sort of data center capacity. Adoption. Listen, this has been the fastest adoption cycle, technology adoption cycle in history, but we still have a long way to go, especially at an enterprise level. Nearly all businesses are using AI today, but very few businesses are using AI in a pervasive manner right across all functions, right? So we're now moving from like the language model deployment of AI into this sort of new stage of the advent of agentic AI. These are not really areas of expertise for me. I'm a market strategist, right? I've been sort of describing this topic insofar as it has a huge impact on our markets. But the way I think about it, in an oversimplistic manner, is that we've basically just spent a decade, but really the last 2 to 3 years, doing stage one, which is the infrastructure build out, right? The data centers, the power grid, the chips, the equipment that go into these data centers, the servers, the cloud computing, and so on. We're doing the infrastructure build out. And now concurrently, we are doing stage two, which is implementation and adoption and deployment. And it's really, there's bottlenecks on both sides.
Yeah. No, I completely agree that, everyone knows how to, put a prompt in ChatGPT, but the agentic AI side of things, I think people, that adoption rate hasn't happened yet.
Yes, but I would say this: it's coming to a theater near you very quickly. We have to remind ourselves the pace of adoption is still just extraordinary. It is just extraordinary.
Okay, another question from the audience. If Huawei successfully develops advanced chips without relying on EUV lithography, how will it shift the global semiconductor competitive landscape?
Well, listen, I mean, there probably will be some extraordinary technology breakthroughs. My read on it, just consulting a lot of experts and so forth, I think China is still a solid 5+ years behind. China is arguably the world's second most powerful technology player, and the gap to number 3 is enormous. They are ahead of the United States in many core and key areas. But I think the one area, it's really two areas that are integrated where there is about a 5-year gap, in my opinion, and that is it's the integration, number 1, of advanced semiconductors, and number 2, software. And many people would say NVIDIA is really a software company, really one of the world's most powerful software companies, right? They've got those 336 billion transistors on a chip, but it's the software layer over them that is a lot of the magic. And then there's a third level of software, the CUDA software toolkit. Like, it's the library of tools built over the software layer where programmers can tap in and immediately gain access to the coding capabilities customized for their industry already. You can go to the shipping library, the financial services library, all built into the microchip. So that's the difference between an advanced NVIDIA chip and, say, a chip being produced by Google or a chip being produced by Apple or another company, and or a chip, quite honestly, being produced by Huawei. It's the sort of integrated software and complete platform from a performance perspective. You can kind of get close to replicating it by just using lots of, many more chips, but the computational power differences are still pretty extraordinary.
All right, we've got the inevitable doubter question. If there is one slide or chart or metric that you can show us to sum up why we are nowhere close to the similar tech bust we saw in 2000 to 2002, what would you point to?
I'd point to the earnings power of these companies, right? I mean, I remember the late '90s well, and the internet revolution was extraordinary. And it was also driven by hundreds and hundreds of companies with no earnings. Um,
Yeah.
so today we have really an extraordinary concentration of the growth coming from a smaller universe of really the most profitable, impressive companies that we've really ever seen before. I mean, these companies, despite the capex spend that they're doing, the hyperscalers, they had 60% earnings growth in Q1. Historically, their capex to operating cash flow metric is about 30%. Today, okay, maybe it's higher. It's about it's a lot higher. It's about 60 to 70%. They're increasingly pivoting to the capital markets, but their debt metrics, their leverage metrics, liabilities to assets are still well below S&P 500. These are incredibly strong balance sheets. These are companies with enormous earnings power. And what they're doing is they're positioning themselves to be early movers on a TAM, a total addressable market, that they believe is measured in trillions. Now, to the spirit of the question, one thing I do agree with is there's going to be some major blowups here, right? I mean, if you're globally have hundreds of companies in aggregate spending $5 to $8 trillion in a 5-year period, yes, there will be projects that go belly up. Yes, there will be stranded assets and so forth, mistakes made, but the progress continues, right? The technology revolution, as we describe it, the computer revolution in the 80s that morphed into the internet revolution and then cloud computing in the early 2000s, right? It did not stop or slow down really at all as a result of a valuation bust in 2001. And so I think that's even more the case today. AI is an irreversible megatrend. If energy prices, oil prices in the Middle East, because if things go sort of backward there again and oil prices go above 120 and we look at recession risk, you'll see a massive technology correction, massive. And then guess what? We go right back to the mega trend really, really quickly. So I would be really bullish the trajectory of this sort of what I believe to be irreversible megatrend. There will be mistakes made. There will be valuation adjustments. There will be pockets of bubbles here and there. There will be extraordinary losses in technology stranded assets, and I think we still are going directionally one way.
Tom, I think we're going to leave it there. Thank you so much for another fantastic presentation. We love all of the presentations that you put out, so please keep it coming. And to the audience, thank you very much for joining. We really appreciate you joining our webinars and all the feedback that we get on Tom and all the rest of our research. So please reach out to your MUFG sales rep for any further follow-up. And in the meantime, we'll let Tom get to bed. Thank you, Tom.
Have a great day, everyone.
Cheers.